All right. The last of the doctrines that you find in the code or pervading the code is called the Equitable Recoupment Doctrine. Equitable Recoupment Doctrine. And you might, when we're done, think that's equitable with a big question mark. And I'm sure you'll think it isn't, but this can be very complex. So I'm going to, when I give you a couple examples, the first example I give you will seem relatively easy to grasp, but you may not think it's fair or equitable, but it's easy to understand. And then there's another example which is a little bit more complex. So I'll tell you what I'm going to do. I'm going to read this to you slowly. Then I'm going to read it again slowly. Then I'm going to read it again slowly. And hopefully at that point we will have gotten rid of some of the complexity. So first reading. Your tax deficiency, meaning you owe money. It could be a current year. It's not that they're after you for back tax. But your tax deficiency of a given year may be offset or reduced by an unclaimed refund of a prior year, even if the older prior year is beyond the statute of limitations for amending a return. Okay, I told you. I'll read it again. Your tax deficiency of a given year may be offset or reduced by an unclaimed refund for an earlier year, even if the earlier year is beyond the statute of limitations for amending returns. So again, I'll go with it again. Your tax deficiency of a given year may be offset or reduced by an unclaimed refund for an earlier year, even if the older year is beyond the statute of limitations for amending. Generally, you have 3 years from the due date of a return to amend it. And generally speaking, if this earlier thing is still sitting out there, but it's beyond the statute of limitations, you might still be able to get it. Now, I'm going to read all that again with a really big if. Your tax deficiency of a given year may be offset or reduced by an unclaimed refund for an earlier year if the earlier year is beyond the statute of limitations for amending your return, if all of it involves one and the same transaction that had an effect on both years. You can get it even if it's beyond the statute of limitations if it came from one and the same transaction and had an effect on both years. Now, as an example, let's say that you sold something on an installment basis, or you were buying something on an installment basis. And let's say the installment was to take place payments were to stretch over 7 years. Well, you generally have, again, 3 years from the due date of the return to amend it, which at the most it means, as much as 4 years. Well, if you have this installment agreement and it goes back 7 years and it's one and the same transaction and something happens now where you can get a refund, you can get a refund even from those older years if it's one and the same transaction. Now, I'll give you an example which is a relatively, I think, simple one to come to grips. Let's say you have you received an item and you reported the income on your 2010 tax return. Okay, now we're sitting here, it's 2017. So your 2016 tax return was due April 15th of 2017. Okay, so if you're back and we're looking back at, say, your 2013 return, you're beyond the period of time for amending it. But in this case, in this example, a person had an income item, $3,000, and they amended and they put it on their 2010 return. We've talked in other these discussions about vendors or contractors that might work on a retainer basis. So let's say you report this $3,000 on your 2010 return, but it should have been on your 2011 return. So you reported it in 2010, you should have reported it in 2011. Of course, you didn't know that. Now the IRS comes in and they audit your 2011 return. And they say, hey, this item, this $3,000 item should have been reported in 2011. Well, you know that you reported it in 2010, okay? But let's say that the period of amending the 2010 return is passed. And what this statute says is, or what this doctrine says rather, is that you can go ahead and amend the 2010 return, even beyond the statute of limitations, because it all involved one and the same long-term transaction. Okay, so you can do that. When I was preparing to do this video, I made a note here in my notes, and I underlined this. It's a large font, it's bold print, and there's an exclamation part on the end, and it says, good luck with that one. But you have, now I've seen it happen, and I've seen it applied. So it can happen. We had one just recently, a person with a situation like that, a client, and the problem here was not the federal income tax law, but Pennsylvania income tax law. See, most states in the union who have an income tax follow the federal. You basically start out with the federal taxable income, and maybe you make some adjustments, but nothing all that overwhelming. But in Pennsylvania, it's very different. The Pennsylvania personal income tax law is very different. We had a client who had sold their business, and they got a down payment. They also were then paid so much a year over a period of, I think it was maybe 15 years. And they found out that the original selling price that they had worked up and both parties had agreed to, they actually had they had a formula for computing the selling price. When they did the computation, they'd made an error. So this person had actually overpaid their income tax. Now, they were collecting the money on an installment basis. And this all had to do with the fact that there was an error in this computation quite a few years ago. So all those earlier payments were overstated as well. Federal return, we did an amended return. We put all the explanations, one and the same transaction. The Internal Revenue Service gave us no question or problem at all. Pennsylvania basically said, tough luck. It was beyond the statute of limitations, and they were not going to budge. Now, we've had times when the state went along with the federal, but this time they would not. They just would not. The person had paid a lot more income tax in the earlier year, and Pennsylvania would not give it back. It would not allow for the refund. it really, the client appealed it. We appealed it, did several appeals. Just there was no give whatsoever. Now, we did find a solution that had nothing to do with the subject of this doctrine. But the point is that Pennsylvania law is different from federal. We may or may not have liked what Pennsylvania did in that case. We may or may not think that they were rational, but they stuck to their guns and wouldn't budge. So it's unfortunate, but it can happen. Okay, I thank you.